Good afternoon, everyone. I'm Ching. I'm the principal at Appworks. So Appworks is basically we are a VC as well as a founder community in Asia, starting from Web2 in 2010, and now 2018 we enter Web3. Now I'm leading the Web3 arm, doing investment as well as helping founders in the region. So today I'm very honored to discuss this new DeFi, redefined DeFi topic with our 4 other panelists. Before we start, maybe let's give everybody 1 minute to introduce what you're doing, who you are. Yeah, I think it's open already. Go ahead.
Hi guys, this is Carl, BD lead of NAVI. So NAVI is actually one of the largest lending protocol on Sui. And we've been working quite a lot of stuff this year. So try to force ourselves into more than just lending and borrowing. And we got a cross-chain aggregator, we got a perp desk, and we got a vault product. So far so good. We try to force ourselves to be like the liquidity hub on Sui.
Hey guys, this is Sky. I'm the CEO of Kryptos. Kryptos is the biggest financial managers in crypto today. We're one of the Binance portfolio company, manage $300 million per day. For 200,000 plus retail users, as well as 250 plus institutions, some of the biggest exchanges, market makers, and everyone. So yeah, our goal was very simple to make crypto finance simple for anyone who is coming in, a beginner, usual trader, business, anyone, and to remove the barrier of transitioning from Web 2 to Web 3. And yeah, previously I was leading investment teams at a couple of VCs, big ones out of Silicon Valley. And I was also leading the marketing at Polygon back in the days. So yeah, it's been like 10 years in the space now. So yeah, it was a very nice journey.
Hi guys, I'm Chef Doxie. I'm Taiwanese here. We are, for those who don't know who is PancakeSwap, we are a DEX. So a DEX is just like a bank. So if you haven't used PancakeSwap before, please go try it. We are pretty much everywhere, BNB chain, Arbitron, Ethereum-based network. What I do every day is trying to make sure that our platform is having the deep enough liquidity for all of the users to trade. So whenever there's a trading token come up, my job and my responsibility is to go to the protocol and to see if they are open to migrate some of the liquidity to us so our community can enjoy a better trading experience. Yeah, thank you guys.
Arthur?
Hi, GM everyone, I'm Arthur Lin. I am the founder of Giants Protocol. We are a real asset tokenization platform supported with AI, multi-agent system, built with the Singapore government support. We are invested day one by the Sovereign Wealth Fund of Singapore. We are helping real world assets, real businesses, tokenize and get them to be more degen on-chain using innovative ways, tokenizing trillions of dollars of assets in Asia, covering from real estate to mining pools, like AI mining pools to gold mines, yeah, any form of traditional assets to be on-chain. I was previously the commander of the Singapore Airborne Special Forces for 12 years. I learned computer science, 9 to 19, Cambridge GCE A-levels with computer science. And my last startup was sold to Alibaba Ali Sports doing zombie run. And I actually did a few zombie runs in Taiwan 10 years ago. Yeah.
It's cool. I think first question I would actually like to ask you, Arthur. I think you have the most experience and went through the Web 2 and Web 3 side. So I think everybody in the Web 3 nowadays is talking about traditional finance and bringing institutions, and especially bringing institutions to add a tokenizing real world asset, right? From your seat at the front line, what's the single biggest barrier? If anyone could be technically, legally, or I don't know, simple trust, that actually stopping the institution from getting into crypto or bringing things on chain? What's the single biggest entry barrier for people?
I think the single biggest barrier that I face every day when I talk to traditional finance is they don't understand the culture.
The culture of degens?
Yes, yeah, the culture of Web3. And it actually took me time to actually learn and build. Over like, it's not like instant, right? You need to degen yourself, you need to make some money and lose some money, all right, in playing, all right, in PancakeSwap or on the DEX or, doing launches of the, different hype cycles. So like the kind of mentality, I think is something that the institutional lack. Because what traditional mainstream investors buy in the institutional products is very different from what the degens buy. And the reason why they want to be onboarded is to actually tap into the fast rising, hot liquidity that's growing in the crypto space. And that is what is draining away from traditional finance.
I think, how about Doxie or Sky or Carl, from the DeFi, from the product design perspective or like DeFi design, what do you think founders or anyone can change to solve this kinds of entry barrier for people to convince the traditional finance to bring things on chain?
Thank you. Yeah, I think from our perspective, since we are basically providing a very good DEX, the biggest problem that we encounter is that there's no standard model for all of the RWA assets. So if you go to see like USDT Bill, there are 10 plus stablecoin is featuring USDT Bill. And it makes me wonder, do we really need that much of the things right here on the market? Because that is going to lead into liquidity fragmentation. And as a DEX perspective, our main goal is to gather liquidity as central, as concentrated as possible. So that is one of the obstacles that we encounter. And what we are dealing with it is that we pushed out one of the things called cross-chain swap, which means that you can easily swap Arbitrum USDC to maybe USDC on BNB chain in one click. I think that is the one way that we are going to abstracted the chain level and making users forget that they are doing certain interaction on the chain level instead of just swap it. So I think cross-chain swap is one of the things that we are dealing with the liquidity fragmentation. But still, in the long term, I think there are still more things that we can do to kind of like standardize the RWA model and RWA token, to make it all just one liquidity. Yep.
What about Sky from the auditing and compliance standpoint? What institutions actually want?
The entry barriers for institutions?
Yeah.
I mean, this could actually make a lot of people uncomfortable, but the structure, the whole thing, the permissionless framework that actually powers innovation in DeFi is the biggest barrier for any institution to come in, because if it is not permissioned, no regulator will actually accept it. If you don't have circuit breakers, no bank will accept it. And if there is the whole data is not standardized, and no institution will be up for spending their $1 trillion into crypto and doing it like they do in Web2. So according to me, that's the whole entry barrier. And there are certain companies and initiatives that are trying to solve it by coexisting the permissionless layer and the permission layer together. So think it in a way that it's in a highway where you have to make lanes for cars and trucks. Cars can take you to one place to another in a very fast manner, but trucks can solve a huge utility side of things, and you have to make it together. So yeah, I think that's the solution to it. And with seeing a lot of institutions coming in, but still that's a small proportion of their original treasury that is being invested into RWAs and crypto as a whole.
So basically, I think people are telling from the mentality, composability, as well as how to get the institution cross the permission side of things to get them actually comfortable using this. But next question, I actually want to start from Carl. DeFi starting from 2019, 2020 is highly subsidizing by a lot of different protocols. We have Solana, Sui, Say, a lot of different protocols. And post the hype, a lot of users actually left to form the others. But recent 2 years, we see like there's some DeFi protocol have more stable revenue, like Pendle Finance, right? And I think more and more are redesigning their economics. So I wonder, like Carl from NAVI protocol, like what kinds of things have you guys changed to make your protocol more sustainable after passing through the subsidizing by the foundations or like trigger the basically subsidizing users to use your product, which you see the other DeFi protocols should also follow.
We're actually a relatively very young protocol. We actually just launched on Sui for like around almost 2 years, but we actually keep on evolving, right? Because we can't survive or we can't keep on attracting users solely based on the incentive from the Sui Foundation. So I guess there's like two major things that we are coping with. Like first of all, of course, share like a part of our revenue and thinking of like how to either like increase the utility of the token or like to provide like a more rebate program for the users to keep up the sustainability. And the second thing will be like broaden our product horizon. So like I mentioned, right? So just doing solely like a lending and borrowing protocol is a little bit like boring, right? So we decided to do different products. So let's say we're working on a PEPDAX. If you got a supply or like a leverage lending position on NAVI, if you are lending USDC and you decided to do a scalp trading on PEPDAX, probably we can lower the interest rate for you and we can increase the LTV for you as well. So I guess like horizontally expanding and increasing the synergy between different line of product will be one of the key things we are focusedly working on this year, Q3 and Q4.
I see. How about your view, Doxie? I think PancakeSwap sold so many different DeFi protocols, right? What's the new trend of the new DeFi design that you see?
I think before we are very like big on BNB chain, right? And after that, we started to think that as there are a lot of chains coming out, and there's a thing called app chain, which means one app, one chain. It's a certain thing that will have to be expanded to other networks. So that's why we expanded to Arbitrum, we expanded to Ethereum, expanded to Base. And recently, we actually expanded to Solana. And I think there are a lot of questions about rising up is asking, what's the reason that are you giving up on BSC? Are you giving up on BNB chain? That are you going to betray your own very good family? But I think the thing is, in the future, in the long run, it's got to be a lot of chain out there, and you can't just stay in one chain. And our goal is to set BNB chain as our home. And after a while, when the mass adoption of the multi-chain is coming out, we are able to bring other community from the other networks back to BNB chain to greater the BNB chain in the long term. So when it comes to different chain, they have different characteristics. If you're talking about Base, there are a lot of AI agent on Base doing pretty good. So you have to be competing with them, and you have to know the tokenomics. You have to know that which AI agent is utilizing which DEX as a default DEX, and you are trying to secure PancakeSwap as being the default DEX. For Solana, you have to provide very good composability infrastructure for all of the builders out there to be able to taking you into account as a token launchpad graduation platform. And that is what we are doing right now. So our strategy on Solana is to focus on the core pair first. So right now we are actively allocating cake emission to the core pair, which is Solana to USDC or Bitcoin to USDC. Since we are the only DEX on Solana is having this kind of things called emission, and so we try to make the fullest of our own advantage, and by securing more market share, securing more volume, which ultimately leading us to have a higher market share. And if you have a higher market share, you will have more users, more liquidity coming to you. And by that time, you will be ready for expanding, bringing all of the Solana degen back to BNB chain. So that is our roadmap in terms of evolving with the trends.
How about the other new protocols design? Have you observed like there's any new trend, like say new DeFi things, like in terms of how they distribute revenue or things with their users? Or maybe Arthur, what's your design about Giant protocol that's you think is brand new compared to the DeFi protocols in the previous two cycles?
I think one of the keywords was mentioned was a lot of AI agents.
Correct.
So I think one of the key shifts is AI agents usage, agentic usage. So they could be actually the next wave of mass adoption, big customers that we are serving. While currently a lot of DeFi protocols or DeFi solutions and businesses, crypto businesses are trying to make our UX more friendly to mainstream, to adopt mainstream. But at the same time, we are also looking ahead. How can we make our UX pathway data-driven that is user-friendly to AI agents? Because we want big buttons, one button, one click has a user. But in terms of the AI, they want the fastest data flow to the solution, and also to have multiple data source to the solution. So the API design is very important. So this is something that our engineers, that is also supported by the Singapore government research, is looking at both the front end to be super friendly for anyone. My mom, that doesn't really even use
Do you
social
think
media.
AI agent is more important than your mom?
I think both is important because they are the ones that will be using a lot of AI agents in the future to actually educate them, to teach them, to, one user can have 10 AI agents to do 10 different tasks. They can have a family office, running by AI agents. So this is something that we are looking ahead to build with Giants Protocol. Yeah, so front end and also back end development for AI agents, and at the same time friendly for any retail users to be onboarded.
Sky, do you have anything that you would like to share, like the new design of DeFi protocols that you observe from the market? I think Arthur mentioned it's very important to design the protocols composable for AI agent, right? But from your observation, what's the most important key shift? Sky, yeah.
Can you repeat the question?
Oh my God, you are looking at me all the time. You're just like, So from your own observation, what kinds of new DeFi design you have observed throughout the market that is pretty different from previous cycles?
I mean, if we rewind ourselves to the DeFi summer where projects were giving away their incentives and subsidies like candies, and we all thought like the more the TVL is, the more successful the project is. But fast forward to now, everyone knows that TVL is not defining the success. It's about how much revenue you make, how much, what is your business. And I think that is dependent upon three core principles. One, how fundamental problem that you are solving in the today's world. Let's take an example of Pedal. They are not a yield-chasing platform. They are basically they have basically changed the market of interest volatility, and that is like a fundamental problem for all the traders. And second main aspect when you are building something in DeFi is how critical that particular product is for the other user. So let's say Lido get Ethereum stake because people have to stake Ethereum somewhere, and they earn a lot of fees out of it without giving away any subsidy or incentive. And yeah, that's like the core factor when you are considering to make a DeFi product sustainable throughout the cycles. The third could be, without incentivizing, people shouldn't even realize that they need to get incentivized. The best example is Uniswap. They earn billions in fees itself, but they never put it back into their token. They never incentivize anyone. But no one in the governance, in Uniswap governance, ever say that we have to switch on the incentivization factor for the token holders. So I think the fundamental DeFi business could be built sustainable if you minus the incentives and bring in revenue. So while we were building the Kryptos, our core focus from day one is how we can be profitable, how we can make more money, how we can make revenue. And that is, I think, all the companies who are basically focused on revenue will actually survive more cycles.
I do agree. I think nowadays we do need more sustainable things. That is, first of all, you have to build a product that's really have the usage, so you don't need to rely on subsidizing the users to attract them. Because how you subsidizing them, they will also leave you to the other protocols if the others like provide a better one. But I do have one last question to support perhaps to all of the panelists that we were, like in the past 2 years, we're always talking about RWA and institution, which actually governance is a very crucial problem, which governance is related to infrastructure, related to how you deal with the token holder, how you deal with the profit sharing, right? So in your observation, if we look forward to the next 2 years, what kinds of infrastructure upgrade or governance upgrade that the protocols or foundations or even application need to do to actually fit into this like new RWA and institutional adoption trend, or even AI agent trend, right? I think maybe let's start with Arthur.
I think the key thing now in 2025, I think the fourth bull cycle, we have seen maturity. Maturity in the industry, maturity in the technology. So this maturity of understanding from like DGen users are getting more complex because they know where are the traps, what are the good governance, where are the data sources that they can see certain things. I will say that the governance can be solved with real-time information of the real-world assets. I mean, for what we are doing, like this is something that is not available, like real-time, real-world asset information. So how can we get contributors like that is working in various industries and various verticals to contribute information and validate this information? And we have a proof of stake, or proof of work kind of information governance structure to achieve this. So this is something that my team is also breaking our brains to build a RWA chain. But actually it's not really RWA chain, right? But it's just a chain that is able to provide accurate, transparent, real-time information to allow governance. Actually, who wants to govern? Who wants to do the governance work? Actually, not much will. But only when shit happens, and then people like, hey,
Need to trace
what is happening to the governance and things like that, right? But if everything is good, nobody really wants to do governance. Yeah.
I agree with him.
You have any other opinion? Like what kinds of things?
The thing is, like, at the end of the day, governance is not liable in courts, and you need legal wrappers. You need standardization. You need structure for all these things to outperform, for institutions to come in. I mean, we all know the headlines that BlackRock's bid crosses $1 billion and Benji crosses $700 million. The whole market is now $7 billion. But it's like, let's agree, when we see that, okay, this is the golden age of RWA, we are entering into something big, but the whole bond market is more than $100 trillion, and this is not even 0.01% of it. So there are some barriers, there are a lot of innovation that has to come, and the biggest one will be the standardization layer, something that can actually standardize the whole RWA thing and how it works basically, because it's okay to bring the retail money into play, but if you want the institutions to play this game, it has to be much more structured for them while not killing the innovation altogether.
Carl, how about NAVI? I think you mentioned that you guys were doing like Go-related things recently, right? Do you guys upgraded any like infra or governance side to make it like compatible for the other suppliers?
Yes. We kind of have to, because it is like a very, very next step for further increase the token utility. And I think like witnessing all these years the evolve of the DeFi world about governing structure, I think we are far beyond that one token, one vote stage. Actually, this is like not a very, very ideal model, right? So we're adapting the VE model. The longer you hold the token, the more voting power you got, and you can lock them up. Pretty much similar to PancakeSwap's voting mechanism, right? If you choose to lock up for a longer period, and then you got higher voting power. And we hope that, like, first off, we can, control the liquidity better of the token, And second of all, we can actually involve more long-term token users into some decision-making stuff, like which pool you want to boost the APR, or like we're gonna have a buyback program. Are you voting for yes or no? Although I hardly see a no here. So this is like basically we plan to launch it around Q4 or something. We're just doing a little bit of testing, just in the final stage of launching the whole governance structure. But I guess like when it comes to working with quite a lot of institutional partners, like recently, right? I think like most of them will be asked to hold part of the VE token to get involved in NAVI's governance structure, because they have like LPs or like some of our institutional partners who do quite a lot of fund managing stuff. But this is like a reasonable ask. So what we are thinking of is like to find a better way to balance between the users' voting power and our voting power, and the institutional partners' voting power.
I see. Doxie?
I think from my point of view, there are quite a lot of things that DEX can do to help solve the barriers for all of the traditional institutions to come in. Like, for example, there are, like back in 2 to 3 weeks ago, there are a trend is called tokenized stock coming out and leading by XStock. So there are a lot of people that are asking that, since XStock is going to be on BNB chain and it's going to be deposit liquidity on us as well, we are still finding a situation that if you are holding the NVIDIA stock, what is the scenario that you are going to put your stock into the LP pool? Since LP pool is full of IL, and if you deposit your stock into it, and if you didn't manage to keep your position alive, your stock will go to turn into USDT. And I don't think that's something that you want to sell your stocks. So in this kind of situation, we are talking about who is the main liquidity provider in terms of the RWA when it comes to the liquidity pool. But there are still quite a lot of things that we can improve to persuade more institutional players into the game. For example, we are basically working like a bank, on-chain bank. And in this type of mindset, you can really think about we are a trading app, but we are more like a bank thing. And you don't want to encounter the slippage on the bank. You don't want to swap your 100 USDT to, let's say, Taiwanese dollar, and you ended up with getting 90% of the slippage. So I think there's one thing that we can encourage more users to use is the limit order. We do have these kind of features, but there are quite a few people just like using it. So by using massively on limit order, you are able to, capable of get rid of the crazy slippage. And by having these kind of habits, in the long run, the UI will be more limit order friendly, and eventually all of the big institutions will come in and they will use our front end to use the swap page to swap their token to manage the portfolio. But like in the high level, in the long run, me personally, I'm very, very happy to see if any government is coming into the game and take over. It's because, like especially when we're in Taiwan, if you're Taiwanese, you'll know that the crypto is related to scam a lot of times. And that usually comes with, there's no really hard regulation on that. And if the government is coming into the game, it means that they are admitting this is a currency. It means that there will be a very comprehensive regulation to rule that there are some action you can do, there are some action you can do. And by having this kind of infrastructure, your mom is going to ask you how to buy Bitcoin in the long term. And that is something that I think I would say we are getting mass adoption. And so my perspective towards if government is going to come in, my thought is always positive. And I'm happy to see governments taking in, and happy to see governments to hire these kind of people to give genuine advice to how to make this the Web3 more closer to our parents, our grandparents, this kind of thing. So in all, I'm very happy to see there are more actions that Taiwanese government is doing in terms of the Web3, but there are still more things that we can do. And hopefully, all of us right now, we can all build for the same direction, and eventually we can manage your grandma's portfolio, managing their BTC portfolio at the end of the day.
All right, thank you. I think it's very, very interesting that we walk through from the institutional adoption, but in the discussion we also talk about AI agent adoption and or real retail user adoption. And probably no matter the token, economy design, DeFi protocol, function design, as well as the governance design or the backend side, API, data, infrastructure, compliance level, I think it seems like everything is getting toward a more right direction that can fit into the daily life of the others and be widely used, not only trading the on-chain token, but the more different kinds of asset around the world. So yeah, I'm very honored to have 4 panel, Carl, Sky, Doxie, and Arthur together with me to share this topic. Let's give them a big applause. Thank you. All right, we'll wrap up our panel here today. Thank you, everyone.